Good morning, everybody. And markets are off and running. Why, we got a very nice question from a gentleman. Maybe he's listening, and wanted to know. Maybe we need to make it more clear or remind everybody on the website. Can we use these tools to trade stocks? Yes, most definitely. In fact, Swing Machine can trade stocks. It can trade them robotically. It can trade them, and therefore we can trade options. So yes, the answer to that is yes. And we have other very sophisticated radars. We have one called Pebble Beach Triggers. It's actually a precursor to this. We developed it about 15 years ago. It's a beautiful code. It will give you stock triggers. We can show you. Um, good morning, IL. Good morning. It can give you stock triggers. Um, and let's just where are we today? So we got a question about where are we? So let's go back. We haven't advanced the ball too much here overnight. We had a high water mark, a little bit higher than this. You can see where we're at for the week. We started at 25,000 and we're at 27,000. So we didn't do much of anything overnight. Had a little high water mark if I was around to have caught it, but that's okay. Um, but we do have other triggers or other tools, triggers, tools, yes, to trade stocks. If you want us to plug in any of your past trades, maybe, or a stock that you've been, and you want to tell us the interval as a real-time test, I'll plug it into Swing Machine, and I'm happy to do that. If you have other questions, now we punch up like this on YouTube just to set the stage here a little bit to show you what is possible, right? We're not trying to prove an outcome. We never know. We're traders. We got to come into the market every day, every week. Thank goodness. It's a great way to go, right? I thoroughly enjoy this. Um, Absolutely do. And so we do it to give you a chance to showcase, creates awareness as to who we are. We invite you to visit the website. We haven't been here for just 6 months or 6 years. We've been doing this since the early 2000s. Susan and I. Stock Market Caddy came out of the ground in 2012 simply because we were bored. I was bored. Um, but I was even involved in the markets before that. Very familiar with the IBD, Investors Business Daily, and buying and selling stock in good and bad times. Very familiar with that, which isn't a bad approach, right? Very familiar with VectorVest. Very nice tool for trading stocks. Um, it's just that we're active traders. Um, that investors business more of a, I would say more of an investment type thing. We're trading. We're moving into markets to extract cash flow with our cash to create cash, right? That's basically what we're doing. We trade. The reason why we trade futures, if you've never traded futures, the reason why we trade futures is a number of reasons. Number one, they're highly liquid, meaning the difference between the bid and the ask is very tight. And that makes it very um, um, efficient, right? So if you wanted to trade, for instance, even Tesla, the difference between the bid and the ask could be 50 cents, 80 cents, it could be a buck. If you're trading 100 shares, it could be $100. So the commissions may be free, but the spreads are what get you. So they're also very tax efficient. We also have great access. The market's open on Sunday night. They're open overnight. They're open virtually all the time. They go down for about an hour a day. As we go now, and the other piece is, Don, there's a ticker I'm looking at. It is a stock trading at $2, but has a massive short float. The ticker is LIDR, potential 100 to 200% and more when ready. We can certainly punch it in. So but thank you, Jimmy. I'll take a peek at it. The When we go over, well, I was going to just finish on futures. You can now trade. When we started, you had to trade minis, and we now have the capacity to trade micros, which are like 1/10 the size. And there's a number of advantages. Brings more people in. It's also more scalable. So we wouldn't be, up $2,000 for the week. We would be up $200 for the week, as an example, had we been trading micros. So it's all scalable, right? We have members certainly that are trading. I'm trading just one mini here, but we have members that trade in size. So Jimmy's asking us about a stock called I don't even know what it is, but LIDR. So let's see if we have a shot on. I'm going to punch it in here. I'm going to try LIDR. Nope. LIDR. Yep, there it is. Yeah, it's $2 stock. And let's put this on a daily. Okay, so on a daily basis, we have it as a short. And we have it, now. So, but I would never short a $2 stock. And it is on the tough to borrow list, right? So, and Jimmy tells us that it has a massive short float, which means that, the potential there is that it's massively short $2. There's going to be another GameStop, that sort of thing. We don't play for that, but others can. Jimmy can. But it is in a downtrend. We would not buy it. I wouldn't buy it. So sorry, Jimmy, but I'm not buying it. I would wait. We can even drop down to a 60-minute though. Let's just see if the 60-minute. No, I'm not shorting it. I'm buying it. Yeah, Jimmy's buying it. He's looking for the short squeeze. And even on a 60-minute, yeah, it was once over 100. Yeah. Yeah, there might be a reason why it went from 100 to 2. There might be a reason. But in any case, we'll put it back. So no, we wouldn't buy it here. I'm not I'm just telling you what, from an educational standpoint, ESU 24, we wouldn't buy it. But I would wait, we'd keep it, punched up, and if it starts to buy. The idea is, for folks that aren't familiar, if there's a stock that is, I don't know what the float is, but if it's heavily shorted, but that isn't something we're doing. But I wish you luck on it. When we go overnight, or further out, we're not going to use, in all likelihood, once in a while we do, but we probably won't use futures. We will use options. And for the most part, our options are defined risk options. And our sweet spot is about 35 to 45 days. And we will sometimes do calls and puts, but for the most part, we're selling put credit spreads and selling call credit spreads. We're big into the math behind options. They're basically counter trading, and we cover this in our Q school, but we have tools to give us very high probability of outcome. Yeah, we do too. Very high probability of outcome and also probability of profit. So if you're buying a call or a put option, simply your probability of profit is about 33%. If you do credit spreads, your probability of profit, not probability of outcome, but probability of profit, will go to about 66%. If you use some of our tools, your probability of outcome is going to go even higher. So we combine the two. Let's put the SPX.X in here, and let's just see where we are on a daily basis. Okay, so the market has come in. come in, we're right here. This is a synthetic representation, so we're really kind of at the mean at about 54.01. When we on the S&P, when the S&P pushes into euphoria and in the VIX on a daily pushes into panic, then we will look to fade the market, right? And so we're right now, we're once again dead in the middle. And we'll put this back to 5-minute ESU 25. No, not yet, ESU 24. And we'll put this back to a 5-minute. Now we trade intraday because we're looking to, oops, ESU 24. There it is. So that's where we be. If you got any other stocks that you want us to punch up or take a peek at, we're happy to. And do we? Now we don't do this we're not a broker, right? We're not a financial advisor. We're not making specific recommendations to buy or sell. We're not. Somebody from an educational standpoint wants us to look at something, we will. Purely educational, conversational. We don't make specific recommendations. We don't manage anyone else's money. I want you to know that. We're here to give insight and provide tools that we have built for ourselves for those select few, and I realize it is never going to be the masses that actually want to do this for themselves. And that's never going to be, and that's a good thing. This isn't a game for everybody. It isn't. You got to be a unique bird to want to do this. And anywho, so if there's any, and then of course we do invest and that would be out years. And in there, we don't use any leverage. We might in retirement accounts sell covered calls against them, which we love to do. But we're not terribly invested right now. So we have, a scale. In fact, we're at a lowest level of investment maybe ever. So we have we're just not, the markets are just too extended in our view. But so if there's anything you have, any questions, let us know. Otherwise, we'll let you watch. The trading that's taking place up here is running a specific program that we've written called SMC Mod K for the benefit of our members. Now, on YouTube, you are on a delay. Not our fault, but it's YouTube. You're on about a 60-second delay. So just know that. Our members have access to a live Zoom feed. And by the way, we've been using Zoom before Zoom was Zoom. And in fact, a lot of our members bought stock in Zoom at about $30 a share. And that was before the COVID stuff. So it has since come back, but they have a live Zoom feed. Now, they don't all access, some do, but they have annual members have all of our tools, now close to pushing 70. These are proprietary radar screens, indicators, paint bars, show me studies, full-blown strategies. And we can do all kinds of things with the strategies. We can, you can count the number of trades that you might want to trade in a day. You can use certainly profit targets and stops, chandelier percentages, things of that sort. You can also time it if you know the model. You're in an average, the model tells you the average winning trade is in for 20 minutes. You can put a timer. A timer on your trades. You can also put a timer when you want to begin trading, when you want to end trading. We can trade multiple time frames. For instance, one of the things that we teach is to trade the 1 minute in the direction of the 5 on Swing Machine. We can do that robotically. We can put in multiple time frames, have one time frame trading against another time frame. We can do multiple markets trading against each other. For instance, we can, sure. Yeah, SPX is a good option to trade, and we do. But for those that don't have the capital, the SPX is the big boy option. If you're buying it, it's going to cost you these days for 35, 45 days. It's going to cost you, several grand. But you can also trade the SPY, SPY, which is 1/10 the size. And where was I? Oh, we can also trade. For instance, we could set up. We have programs that will trade the ES futures, or for instance, the SPY, based on what the VIX is doing. And because we can do this, we can also model. We can backtest. Now, it is true. Wall Street has a lot of axioms, a lot of old sayings. Some of them, a lot of them are lies, but a lot of them are true. Some of them are true, very true. And one of the things that they say is what's happened in the past may or may not happen in the future. And that's exactly right. I mean, they're telling the truth on that. It isn't just a liability statement. It is, but you shouldn't discount it. And we emphasize it because there is not a Bible code to the markets. There isn't. The golf ball I play the same golf course all the time. The chances of that golf ball landing on exactly the same hole or exactly the same place on exactly, from shot to shot with exactly the same conditions is slim and none. It isn't going to happen. And the market isn't going to, to do that either. Would I track futures with the US dollar? No, no, I wouldn't. But if I was interested in doing that, what I would do is I would put, the dollar in, I'm assuming you're saying the ES futures. I would put that into a program, and I would look to see over the last few weeks, last few months, if there is any relationship that is discernible. And that's where the model comes into play. So it's good to be curious like that. I don't think there's really that big of a relationship right now that's actionable. Although, you do see the dollar run up, a lot of times in advance of a pullback, of a correction, as they begin to liquidate. Hard to sometimes see them liquidate and they go to the dollar. But I can tell you what you can do is trade the dollar with the euro, of course. So let me just show you. Let's see. We'll just put in at DX. I'm going to put this on a daily. This one happens. This has the dollar on delay, but the euro is not. And this trade doesn't take a lot of capital. So let's just put this on a daily. Let's see what's going on here. Here's the dollar. So, and here is the euro. This is not, not on a 5-minute, on a daily. We'll squeeze them in here. So here you can see the dollar contract went long 11 days ago. 11 days ago. And now you might say that, oh, it's just $534. Well, a dollar contract is only $2,000 to go overnight. It's 25%. The percent return is based on the entry price and where it's trading. It's not the true return because these are leveraged. And the euro also went short 10 days ago, and you're up 575. So it's not all bad. If you had gone long the dollar and short the euro, and you wanted to take it overnight in capital, you would have needed about $5,000, and you're up 1,000, which isn't a bad return in 10 days. Now this is, and this is swing machine. This is swing machine. And I'll put this back before I forget. ESU. So you can do that sort of thing. Oh, I keep thinking 25. Why am I doing that? ESU 24, ESU 24, and then we'll put this back to a 1 minute. Now we trade 1 minute, or we're trading intraday because we're getting inside, hopefully. Now I'm going to need to step aside. We have a gentleman who's wrapping up his what we call Q school, and I'm going to be with him, and so we're having a little bit of a draw here. We'll keep an eye on things. Now we never know what the outcome is going to be. So, and again, we're not showing this to for folks to be shadowing and putting trades on. We're just showing you how we go about really managing our emotions. I don't have carpal tunnel. I don't have my hand form fitted to the mouse and, trying to, win on every single trade. That isn't going to happen. And, but if you have any other questions, be sure to visit the site, and I'll shut up and let you watch. The market, the Swing Machine is a trend identification system. Does not use moving averages, doesn't use stochastics, doesn't use fibs, doesn't use MACD, doesn't use anything traditional. Nothing wrong with some of those things. Some of those things are okay. And some of those things we might use in other places. We just don't use them here. It is a trend identification system, and it doesn't get every single trade right. And there's a number of ways to trade Swing Machine, both mechanically, visually, and robotically. Again, we can trade multiple markets, multiple time frames. We can trade it in trend, which is the easiest, or a person could also use it to trade counter trend. But we also use, and we're big fans of advanced bar types, which we're not using time. We're using point and figure. We're using Renko, both classic and custom. We're using line break. We're using range bars. We're using Kagi charts. And we're using them with programs and tools that have been custom fit for those programs, all to manage risk and to get in and get the job done. And there are certain tools there that are very conducive if you're frustrated with chop. You can't eliminate chop. Markets trend up, markets trend down, markets go into chop. 70% of the time they're in chop. So you've either got to learn to adapt or learn to drink. And I don't drink. But we do have programs that are specifically designed to trade the chop, or for instance, to trade the open. We have a very sophisticated, beautiful program for establishing the opening range and then trading the opening range for the rest of the day or the rest of the morning, which is a beautiful way to go. So any questions, let us know. We'll let you watch for a bit, and I'll be here. Thanks. Have fun. Yeah, Jimmy's asking, can a system detect trends? That's exactly what it's doing. We just don't have the time to in service, how one trades this. So I know you're seeing it red light, green light, buys and sells, but there's a technique for trading this. And in the it's the first day of Q school, first 1 or 2 days, we in service it. Takes us about an hour and a half, 2 hours to in service how one might trade this and how to use it. And then it takes about 2 to 3 days to get comfortable with it. And of course, we can match it onto a chart, and we can even measure it and get all kinds of intrinsic data that a person can use to help their trading. So we can go in and we can see over the last, 2 weeks, for instance, how many 1 minute trades were there, what the average run-ups were, what the average rundowns were, um, how long we were in the trade, anything and everything to get at that intrinsic data and that back test information. And that's really what we want. We want the back test, it's, you might draw the conclusion, if the past is the past, then what good is a back test? And I get that, but there is value to the back test because um, decide where the profit targets might be, where the stop losses might be, how much profit can we expect, that sort of thing. But Swing Machine is specifically best at identifying a trend, and although it can be used to count a trend, right? So, and it can be used on any interval. Now we've had this, by the way, we've had Swing Machine. We didn't call it Swing Machine. It was just radar in the early 2000s, Susan and I. And then when we decided to teach others and make things available in 2012, we, wanted a theme, and the theme was around golf. So we called it Swing Machine and Stock Market Caddy. That's where that came from. Um, the idea, the concept from for Stock Market Caddy was not, right. We set out to do this ourselves so that we didn't have to use any of the other brokerages or have any financial advisors. I had my fill. Sorry if that's your gig. I get it, but I had my fill of that. And um, but Susan and I were watching a movie, and it was the movie Bagger Vance. And there's a scene in that struck a nerve with me where the golfer, his ball falls into the woods. If you've seen that scene or seen that movie, and he starts to tremble and shake. And I stopped the movie, and it just kind of struck me. And I said, Susie, I just wonder if I said, do you remember, we were nervous in the beginning. We were uncertain. There were many times I thought I was going down a wrong road, many times, because this all just didn't pop up. I mean, we weren't immediately successful. We spent thousands of, it's embarrassing how many hours we spent in money, through trial and no, there wasn't anybody. We didn't have anybody. I mean, we didn't even, there wasn't Twitter. I mean, there was YouTube, and everyone was doing the same shit, moving averages and stochastics, and none of that worked for us. If it works for you, I'm glad, but it didn't work for us. And but when I saw the scene in the movie, I thought, geez, I wonder if there are people out there like us that could utilize these things. And so Susan's like, well, put the movie back on time. But I scratched that out on a napkin, and the idea was the Stock Market Caddy. And then we discussed it the next day, and I said, and it just stayed with me. And I just thought there would be. And so Susan's prerequisite was, she said, well, Don, you can do it with a couple of provisions. Number one, Stock Market Caddy cannot take away from our own trading. That was number one. Number two, that it had to operate to the business person and understands it has to operate in the black, within the first, several months or year. So we didn't know. We didn't know if anybody would join. We didn't know. We didn't know what we didn't know. And I think, I don't know, I think there was a third one. I can't even think what it was, but and it did, I mean, we have folks that, well, the very first person to sign up is still with us. Very first person. And from years ago. And it just has continued to grow. But what I didn't know, what I didn't anticipate, though, was that not only was Stock Market Caddy not going to take away from what we were doing, but it was actually going to make us better traders. Neither Susan and I, we didn't know that. We didn't think that through. And the reason for that is because everybody has different backgrounds that's coming in, everyone. We have a gentleman that just came through, which we've never had, and he is a race car driver. race car driver. I've never had one of those. I had a different perspective. And just as calm, I don't know. I've never met a race car driver before, but I would have, I don't know. I just kind of had an impression that maybe a race car driver is kind of excitable or something, maybe. I don't know. But man, this dude was as calm. He was super calm. I'm like, huh, maybe that figures, and he was relating, we would be talking about trading and he would be relating it to racing a car. But we got pilots, we got CEOs, we got CFOs, we got software specialists, we got policemen, we got all kinds, all kinds of backgrounds, and everyone brings their own perspective and their own thing, and that's the beauty of it. And you can set these tools up. Now we do want to slow it down, we by going through the Q school so that you get a good view of us, and you get if you're going to become an annual member. um, a monthly member, you don't have to do any of that. You just get a video view of all of our tools at night, and you can make your decisions from there. That's suited for swing trading, option trading. But if you want these tools on your desktop, you do have to go through what we call a Q school, and you would need to have TradeStation, because these tools will only work on TradeStation. They're written using their easy language, and they'll only work there. Not to slight anybody. There are plenty of other, fine platforms, but any case, I kind of digress there. Any other questions, let us know. We'll let you watch. Market's just kind of not much direction right now. If you're seeing a difference between this number and the number in the upper left, it's because this tool up here in the upper left is updating, not exactly on every tick. It's every few seconds. This one's updating every tick. Um, and if you're seeing a delay on your screens versus what you're seeing on YouTube, it's because YouTube is forcing a delay of about 30 or 40 seconds. Also, the image on YouTube, you can set it in high def, but I think it's limited to 750p. Our members have this on their desktop, but if they patch through on Zoom, it's high def. For those that are coming by, just from recent memory, and of course we're tracking this particular program on Thursday ran the NQ and did, from midnight to 3, did on running one contract, did $6,600 in one day. we ran it on Friday on gold, and that program did I think it was like $795. The profit factor on Thursday was 3.1. The profit factor on Friday was about 1.5. Now, if you were trading manually, mechanically, that's pretty narrow. 1.5 is pretty narrow, but with the machine doing it, I'm just fine. I'm okay with that. I mean, the machine is making the decisions here and stressing over it. I'm joking, but I'm not making these decisions to buy or sell right now. They're doing it. If you are making decisions based on the money, which is what most people do, then you're going to be, you may not agree, but if you think about it soberly, you'll be making decisions based on fear and greed, greed and fear. And if you do that, they're going to own you. They're banking on you doing that. We're aware of what we call profit factor, which is gross profit divided by gross loss. And that is what we focus on. We don't focus on the money. And we get specific tools and a specific approach to help you get over that, because you do need to get over it. And we call it trade proofing. The Navy SEALs do something called drown proofing. And so we do trade proofing. We got to get you over this idea that you can, win on every single trade, and you got to be, grinding on every single trade. Otherwise, your head's going to get in the way. You know, you need your head, you need your gray matter. You do need to make decisions. You just don't want to be making decisions on greed and fear. We do, and we've been asked this. One decision though around, and I should point around the money that we'll make is we will decide when we're going to start trading and when we're going to end trading, right? So, and that will, in large part, depend on where we are in the day, where we are in the week, and where our account is in relation to our weekly goal, our weekly plan. So this may look to you like I don't have a weekly goal or a weekly plan. I most certainly do. And we've been very close to where I could shut down for the week. But it's only Tuesday. So we'll let her keep running. Now I can intervene. And when you're running, and this is just one, right? This is just one radar too, by the way. And this is just one strategy. We get dozens, right? There are dozens. I mean, I don't think a person right now with everything we have could effectively run or test or vet all of them in a year. I don't think so. And the other issue is, though, with our programs, they will, as anybody's programs, they will come in and out of favor as the market oscillates and changes too. So you do need to have that skill set. There are decisions that you have to make. It's just that we don't want to be making decisions on just the money, which is what most people are doing. Just to show, I'm going to try to bring into view. This is a stock trader here too, by the way. You want to trade stock, let me get this opened up. See, I'll give you a view. Bear with me. I'll go find it. So this is, let me bring this into view. This is another radar. When we're dealing with stocks, we We color code it blue. This is called SMC Trade Generator Pebble Beach Triggers. This is a beautiful little program. And this is what we wrote. This was the first program that we wrote. So this is in the early 2000s, and it works beautifully. See these signals right here? These are trade triggers. There are, if you take out the label row 1, so there are currently 17. You can just tell we're in the money in every single one except one. And this will give you, so this is Royal Caribbean. It was a buy at 151.18. The stop is 148.87. Now, it's possible that you couldn't get that because it gapped. I don't know. Let's go look and see if there was a gap. The low. Yeah, it looked like let's see. Yeah, it looks like it gapped, but actually would have generated even a buy yesterday. But these are today, so it's repeating. You would have had a buy even I believe yesterday as well. So it's back to back, but these are all being triggered today. And the purse, because these are not leverage, the purse is set. We went in and gave it a $10,000 allotment. So the purse is being calculated on $10,000. But you could you could use options here as well. So, and this is not unusual at all for us to have 30 or 40 triggers and every single one of them be in the money. But you get the entry price and you get the stop, and it's a trade trigger. It's a highly probable trade trigger. It can sometimes be the start of a trend, but they're only meant for like 3 or 4 days, 3-4 days. Trade triggers. It's a beautiful tool. We'll bring that out. So to answer the question, do we trade stocks? We do. It's just that we use options. As we take, I'm going to have to break at 10. I'll let you watch. But we can see, and I know you're watching with a very critical eye, which you should, right? I don't have a problem with that. But understand our members have this up all the time. So in the beginning, you do watch it with a very, very critical eye, and and again, you haven't been in service, but they're watching it more so as a dashboard. You begin to relax, and they, I even discussed this with the race car driver. It's like, he glances at his dashboard. He's driving, he's racing. Um, but the market is very mixed right now. I mean, you can tell, we can tell as well. When we can trade this robotically, we're not. That's not what this is doing. This is trading something else. So we can mix the two. And but there just hasn't been much of anything here right now. We do see the VIX though on a 5-minute level trying to go long. And so if the VIX does go long, we would expect these markets to roll over and roll down. And if they do, they're going to light up. And in that program, we'll pick it up as well. I need to. I've got a 10 o'clock appointment, so I'm going to let you watch, but I am going to block this. I'll be back and can show everybody, but I don't want new people coming by and trying to. So I'm going to just block the purse out here because I don't think that would be the responsible thing to do if I'm not here. And but I don't have a problem with folks watching here. I've got to break away. I'm going to be late. I'll be back later. Again, we invite you to visit the site. Thanks. Hi everyone, it's Don. We just finished one of our Q School sessions, and the strategy has just gone flat. It's got a flat spot here, and we are down for the day a marginal amount. Um, let's just take a look at it. I'll show you. Given day, we're down 863, 863.40. So we had that earlier morning chop. Um, we're not, there we go. We're not trading swing machine, but if one had, we can highlight a couple of things. The 5-minute ES is trying to get long now. I'm not sure that's going to be the best place. It's kind of a mixed picture. The NQ went long 29 5-minute segments ago at 950. If a person had taken that, they would have been using what about $2,000, 1950 in margin. They'd be up 2,300. The Russell went short at 305 this morning, still short. The Dow went short at 220 this morning and is up 1900, still short. And then, of course, you can even trade Bitcoin. Now, Bitcoin futures is a huge contract, very big contract. But we'll see if the strategy can continue to dig its way out. We're still profitable for the week. It's only Tuesday, and we'll see. We're still expecting a, we think maybe a turnaround Tuesday. We'll see how that plays out. We're not going to trade. We don't trade what we think or what we feel. We just try to trade what we have and what we're running. If you have any questions, let us know. Otherwise, we'll let you watch. Swing machine is not using moving averages. I know everybody uses moving averages. That's what everybody knows and what everyone tries to do. And is it the 2 over the 8, the 8 over the 2? We don't use them. You wouldn't get this view if you did. Nothing wrong against any well, averages are averages. There's probably about 12 or 15 different styles of averages. You got um, you know um, weighted averages, exponential moving averages, all kinds of moving averages. They're average. They're after the fact, and and we don't use volume to speak of on much of anything. The one thing that does precede and that we can measure precede price action is divergence. So we do like to trade divergences, and we have tools to measure that as well. So we'll see if we can get another trade off here this afternoon and clean up our little draw. And any questions, let us know. In terms of Q School, we will only conduct, it's one-on-one. It's 3 weeks plus, give or take. It's one-on-one. We won't do more than two at any one time. And only because we have a person that had reserved a spot and opted to move it for scheduling purposes has opened up an opening for July. So we do have a July 8th Q School availability. And/or, you're always welcome to schedule with us, and we will schedule those things weeks or sometimes months in advance. We have a limited number of annual license. First is anyone who wants an annual license must go through the Q School. Everybody. I don't care. We have folks that have been trading. I had one gentleman say, Don, I've been trading my whole life. My daddy was a futures trader. And what can I possibly learn? He learned a ton. And so we want to make sure that everyone has that opportunity to say, no, this isn't something I want to do. So it does slow it down. But we want to make sure that you have that opportunity. Okay, so I got to take a short break, but we're going to let you continue to watch. And if a trade goes in up there, it's due to the machine. Now we're still a little suspect on this move. The VIX is still trending down. We'd like to see that VIX trending up, and we might need the Nasdaq to roll over here, and we'll see. You know, we haven't drawn any blood here today. We're well off of a high watermark, but we're still in there, so no problem at all. Hey, once again, we'll say good afternoon. The machine is trying to dig its way out, right? We're profitable. We're profitable. How about you want to know? I want to know what is the performance characteristics since midnight. So we'll run a little report. Let's go to TradeStation, Trade Manager Analysis. Let's generate a report. And can we do that? And there it is. So it's real narrow, right? We've had 17 trades. It's had 17 bites at the apple and only 35% winners, which it's a trend following, so that's acceptable, but we'd like to see it a little bit better, but it's the profit factor that's narrow. Profit factor, not counting the 195 up there, it's running at 105. That means we're narrowly profitable. Now, if I was making decisions to buy and sell, sell and buy, I would be exhausted. I would have been up since midnight. I'd be stressed. I'd be, man, Susan 7 out of 10 times, 6.5 out of 10 times, narrow profit factor 1.05, but I'm not exhausted. I'm not. I'm just letting the machine do its thing, and I know what it's capable of doing. So I just let it, and the machine is forcing the market to pitch to us. And it may follow off some trades and, but he's still in the batter's box. That's all I have to make sure is that the strategy stays in the batter's box. So let's, oops, let me see if I can generate something else. See if I can go back. Let me try this. Yeah, no, we lose some accuracy there. Okay. 24. Yeah. All right. Any questions about who we are, what we're about, what we're trying to do? Don't hesitate. You want me to plug in anything, any stock, any market? Could be silver, could be GLD, could be the SPY, could be the S&P cash. Just tell me the interval you're interested in. And again, it could be a stock. And from there, you make your decision to buy or sell. Now, we showed you earlier the Pebble Beach triggers. Let's go look at the Pebble Beach. So this is a different radar. And the code on this is really sophisticated and really, really good. Really good. It's doing something different. Let me lose those red brackets, by the way. Let me lose those. We'll back those out. I think I can. There we go. So this is the SMC trade generator, blue for stocks. And here are a list of stocks, sell and buy signals today. If you had traded $10,000, you'd be up 6% here, basically 602, 586 on the cruise lines. They're great trading. No, it's Norfolk Southern, and this is Royal Caribbean. And out of 500 stocks, we only have signals on 32, and we're profitable in 31, 30 of 32. And this tool tells you how much you'd be up or down, gives you the entry price, gives you the stop, and it gives you the date. And we do explain in Q School exactly how this works and why it works. The code, though, is phenomenal. I must say so myself. And we do all our own coding. Now, it has been, and I'll give you that, it has been a choppy, sloppy market, right, today. It absolutely has. But so we're hanging in there. And we're seeking trend. We can't know when we're going to leave chop and get into a trend. Wish we could. But sometimes when you're trading a particular market, a particular strategy, you can begin to learn, you get a little bit of muscle memory, and between the hours of 11 and 1, it gets a little sloppy. And you can begin to do other things, and you can test for these things. So for instance, we have a person in Jacksonville who's been with us for years, Chris, and he's actually running a program in one direction from early in the morning to about 11. Then he takes the very same program and he runs it in the opposite direction between the hours like 11 and 2. because the market gets really choppy. And then he reverts back to the original program. And he can measure that. He can measure before he commits his time and his capital and his effort. He can actually measure what that type of thing would have been doing over the last few weeks. And, he's just been mimicking that and shadowing it. A little different than what we're doing here. So we can build in what we call, and we were calling this before AI was AI, honestly. We were building in what we call AI function, where the program can make adjustments intra time frame, can make adjustments on the fly. Now, you're not seeing that sort of dynamism. What would be the word? Dynamicism. I can't say that word here on Swing Machine, but we could build it in, right? We could build it in. And so one of the things that we teach is in the beginning is to trade the 1 minute in the direction of the 5. We can actually do that robotically. We can have the 1 minute only go long in the direction of the 5, and in fact, we did this with one of our folks in the Q School. And the question is, well, maybe it shouldn't be the 135, right? Maybe it should be just the 2 minute versus 7 minute or 8 minute or 10 minute. Well, when you have the program and you know how it works and you know how to optimize values and you know how to look at that, you can then plug it in and see before you sit your little fanny down and sit your good hard-earned money on the barrelhead and start chasing something, So some guy on the internet says, well, if you buy my program for the 2 and you chase the 2 over the 8, you're going to do maybe. But I got to tell you something, I'm going to write a code and going to vet that out before. So that's why it takes so long during the Q School, because now some of these programs are even what we call black boxes to us, right? I can't tell you definitively where Swing Machine is going to go long and go short as an example. It isn't a black box by design. We're not trying to, but I can't tell because it's math. The Nicholas timing model that gives us a daily signal, it makes a decision off the data of the indices, the data of the VIX, and the data of the 10-year Treasury. I'm sorry, but there's nothing I can see on a chart that can tell me where and when it's going to fire. It's a math formula, and Susan wrote that. Now, the other hand, the Pebble Beach triggers that we showed you, that is very discernible on a chart. That's doing something very specific and can be seen on a chart, and we will describe that. And it can do that on any time frame. So where we can show you a strategy or an indicator and tell you specifically where and how it fires, we will. In other instances, we can't, because we can't even discern it. We have something called smart exits. I can't even tell you exactly. They make I can tell you in theory what they're doing. I can tell you what they're trying to do, but they make adjustments on the fly. And so one of our members, he's in Germany. He's a software engineer, David. He's been with us a long time. He's German, so he's very, very precise, right? And he's a software engineer. He's very precise, and he took the what we call the smart exits, and he isolated each one of them over a period of time and measured them to see if there was an edge. He wanted to see himself an edge over traditional exits. And he found for his satisfaction that there was. And he told us, he goes, yeah, I think there's an edge. And we're totally fine with doing that, wherever your skill set is. Not everybody has that one skill, can be acquired, but not everyone has that interest. If you can get done what you want to get done and get your money out of the market, then hallelujah to you. Yeah, I mean, you don't have to introduce, and we say this, it's good to be curious, but you don't have to introduce complexity just for the sake of being complex. In fact, most of our members start out of Q School trading too fast too quickly, too much leverage, too quick, with too many things going on. And we actually teach to slow that down. The folks who have been with us the longest, they actually do that. They trade very slowly, or much more slowly, much larger, maybe not larger in margin, but larger intervals. Make sense? And we can show you. So we're all about empirical. Like we could drill down. There's another column here that's hidden, not on purpose, but just to save space, that can tell us how many 1-minute trades there have been since 4 o'clock this morning. And we set that time, or we could do it since midnight. And then we could drill down and say, what was the average run up? What was the average run down? What was the average winner? What was the average loser? What was the risk factor? And generally speaking, the 1 minute pays out, we know historically, about $300. Generally, sometimes it can be more on the 1 minute swing machine. And generally, swing machine is delivering a risk factor of somewhere between 2-to-1, 3-to-1, sometimes 4-to-1. That depends on what kind of a market we have, because the market does change, right? So we're mapping something. We're literally mapping something that is not the same from hour to hour or from day to day. It's kind of close. It's not radically different, but it is different, right? And we're mapping something that is not fixed. And our tools are fixed, but they're flexible enough. So you put a combination of that together with some good acquired, trading skill. And I come back to the pilot analogy, even though I'm afraid of heights and I would never fly a plane. But I talk to pilots, and we have pilots and people that do similar type things, and they do very well because they get it. They just get it. And if you get it, we're ready to help you out. You can ultimately, as an annual member, maybe you have ideas. That trading the opening range that I mentioned earlier, that actually came from a member who came across an idea or a concept about trading the range. And he was actually subscribing to somebody that wasn't supporting it and didn't have much flexibility. I wasn't familiar with it. He described it to me, and we set about writing the code. And that code is really good. It's very intricate. We can use it a lot of things. And so now he doesn't have to subscribe. And actually, it's much better than what he would have been doing before. It's much more versatile, much more. And we can optimize. You might be thinking about optimizing stops and profit targets, but we can also optimize the time. Is it practical to trade between the hours of 6 p.m. and midnight? You can test for that sort of thing. I can tell you now, it isn't. Is it practical to trade between the hours of 3 and 8 in the morning? I can tell you that it is, because we measured it. We can measure it. Now, it'll vary from day, not radically, but Europe comes online roughly around 3 a.m. And our markets will stop moving a little bit, certainly the currencies. Japanese yen trades overnight because they're awake when we're asleep, and we're asleep when they're awake. Aussie dollar, same type of thing. So you can trade in the off hours. We could put this program on the Aussie dollar and run it overnight. When it comes to currencies, I'd probably want to have some sort of prevent stop loss on, though, a prevent. This one doesn't, because I don't know what the central bank in Australia is doing or the central bank in Japan is doing. And if they come out with some sort of pronouncement while I'm sleeping, it could be not catastrophic, but we could get a negative outlier if I don't have a prevent stop loss. Just something there to make sure that we don't get hit by a rogue wave. Now, what I can do I'm still inclined. I'm a little bit biased. I still think the market's going to turn down. So I'm going to go up here if you don't mind, and I'm going to intervene and capture that trade. And then I'm going to reset the strategy. Now it's probably wrong, right? It's probably going to run up and run the rest of the day. Probably so. Right? It's usually the case. But I can do this. And this is the first time I've done it really all week. And now I'm going to re-automate the strategy. So the strategy says, okay, I see, Don, you are now flat and I'm flat, and the next trade will be a short if it goes off. It may not. But we're to the good $571. Now let's see where we are in terms of that profit factor since midnight. So we should be giving us a little bit of help. And I just want to make sure that we get that one in the boat. So the profit factor is still really narrow, 1.13. Yeah, narrow. And if I was making decisions on every single trade and I was running a profit factor that narrow, I would be exhausted. You would be exhausted. It's to be tiring, but I'm not. Now, we like to use as well, if you are into real estate, you hear the old expression, location, location, location. Well, we like to use also price charts versus just time charts. If you think about it, price moves how? Not left to right, moves up and down, like degrees on a thermometer, up and down. Time is what moves left to right. And in large part, a lot of times time distorts the price action. But we want to keep an eye on those time charts because 99% of people are using them and we can see them. So we kind of want to know. And the options market uses time in pricing their products. We want to know. But we also use price charts, price, point and figure, Renko, custom Renko, Kagi, range bars, all those. And when we couple those price charts with Swing Machine and maybe couple them with each other, deadly, absolutely deadly if you get good with it. You get to see the price action in a way that the retail trader has no clue about. They just don't see it. Now there is a lot, but you will, it's just like anything else. You do grow accustomed and you will learn it and you'll get more and more comfortable. The gentleman, Doug, who's now an annual member, and thank you, Doug, and maybe you're out listening there. I had a habit of saying to Doug, a very nice gentleman from Arkansas, very nice, so polite, always on time, very enthusiastic. And I would say to Doug, Doug, I'm not frying your brains, am I? I mean, he was with me every day for the last 3 to 4 weeks. Really nice guy. Is no, Don? He goes, but you are turning my brain into a smoothie. I'd never heard that before. And I'm like, okay. Um, but um, but he's going to do just fine. He and he's got a very mature perspective, and and he was doing very well, during his Q school, running profit factors 5, 6, very, very good. Very good. You're running a profit factor of 5 or 6, you're making $5 for every six you make. That'd be a very successful dry cleaner business or pharmacy or subway store or any other business, right? That's your return on inventory, return on capital. You got to get a return if you're trading, right? It does no good, like, just to make money on one trade so that you can brag. I'm not saying that to anybody here personally, but so that you go to the golf, the pro shop or the tea time. Hey, I made $10,000 last week, uh, that's does you no good. You won't need to generate cash flow so that you're out there playing golf every day and everybody else is doing whatever they're doing. I don't, I've said this, and some people ask why. I don't talk about the markets in public. When I go play golf, I go play golf. When I go fly fishing, I'm not running into people when I go fly fishing. When I go to the dog park, I go to the dog park. When I go wherever in public, if I go to a party or something, I don't talk about markets. I just don't. I talk to only people that are here because the 5 or 6 people that are here are keenly interested in this. You have to be keenly interested in this. And I like having conversations and I like to be challenged and I like showing off the baby. But I only really want to be talking to people. They don't necessarily have to have been traders, but they have a keen interest in it. But the drive, what I would call, might say the drive-by, I don't want to get into a discussion, with some, Tom, Dick, or Harry about, I'm not investing in oil stocks, Don. I'm investing in the piping and the infrastructure, and that's where it's going to be, like the old proverbial, what was that movie, where, the guy says, what was that movie where the young guy was dating the older lady, and the old guy said, you got to be in plastics. I think it was Dustin Hoffman movie. I'm dating myself. Was that the summer of 42 or something? Summer? I forget. But so we're not, I'm not espousing fundamental opinions about anything. And if you're honest with yourself, or you're dealing with a money manager, right? I don't any longer. I don't. I fired them all, but I had. If you're dealing with a money manager that is honest, I would, and there are some that are very good and they are honest. And what I would ask them is when they tell you that a stock is going to do this, this, or this, then I would also ask them, can you please tell me why it would go completely the other way? And if they can't tell you, then they're not being honest. Because I could make a case that the S&P is going to go to 6,000, 7,000, 10,000, why would it ever go down? I could also make a case, both fundamentally and technically, that the son of a bitch is going all the way back down to 800 eventually. I could. I'm not going to bet on either one, but I could make a case for it. And if anybody's thinking out there that, oh, it'll never happen, never seen it. And I'll be kind of dating myself here a little, right? I didn't have as many assets, but I was here in 1987. Yeah, I'm that old. When the stock market fell 22% in a day. It can't do that today because of the brakes that they put in, because of the rigging they put in, but it can fall 10% a day in 5 days. It could fall 50% in 5 days, limit down, limit down, limit down. I don't even want to think about what the circumstances might be to do that, but it could. The NASDAQ topped out in 2000. It was kind of interesting too, because in 1999, we knew it to be a bubble. We knew it was going to correct, and it started down in August. I want you to know this. It started down in August of 1999. It made its really steep correction. And then it came back. It came back in October and November, and I was completely out. And I was trying to short, but they wouldn't even let you. I don't even want to say what firms, but you couldn't even get short. It wasn't legal. They wouldn't let you do it. You would have to have used options, and even then they were reluctant to do it, which is what in large part fueled the bubble, because everybody was on one side of the thing. And then the market came back, and I can remember thinking, oh shit, do we miss it? And it rallied into 2000, and it rallied into January, February. I'm like, shit, maybe it's off and running again. And things were really bullish. We had a lot of stock. We had 7,500 stocks. Pfizer had developed Viagra. The internet was out there. The Berlin Wall had come down. There was a lot of reasons, the .com, the internet, Global Crossing, JDS Uniphase, all this fiber optics was the buzzword, like social media, like AI. There's always these memes, these themes. There always are. And it was still palpable, it was still bullish. I said to Susie, no, I don't trust it, Suze. And then on March 5th or 6th of 2000, it started down again. And then 9 months later, the NASDAQ went from 5,033 to 900, down 90%. It was, we were out of the way, but it was something to see. It really was. To this day, they still dispute why that was. And then, of course, the slow grind up to 08 and once again, and I don't know what it is about March, but the .com started to crash in March. I'm going to say 08. I don't know if it started in March necessarily. I have to think about that. No, not really. But it bottomed in March. So March, beware the Ides of March. But I think this one, the conventional wisdom here, the fundamental conventional wisdom is that, we're going to stay up here right up until the election. And then after the election, then of course it's going to crash. So I don't know. When everything becomes too conventional, I start to wonder. But we're up here on ether, right? We're just up here on, this is, and the problem we have is, see, I have those battle scars. I know what a bear market can do. 08 was not really a bear market. I think it was just a steep little correction. I can show you on a chart, it's like middle of nothing. Everyone says, how is that? Well, that was 1929. Not really. Not really. And it wasn't matched in the economy. But I could, we don't have as much stock, and there's reasons for this bubble, right? This has been engineered. I hope everyone knows this. We can point to some great books if you want some great books to read. If you have an interest in that sort of thing, I'm happy to share them with you. But I'm not buying this. I'm not. This is a financially engineered bubble. I could show you some charts that would make your heart stop. Really. It is so unbelievable. Couple of things that I'll just share with you that if you don't know, here in the States before 2008, well, let me put it this way. Before 2008, and certainly before 2005, 70 to 80% of the money in the United States was what we call actively managed. I'm not saying individuals were actively managing it, but they were putting it in the mutual fund industry and they had active managers, and people would chase those managers around like ball players. It was about $3 or $4 trillion. That is completely flipped. Today, 70% of all the money in the market is passive. There is no active money management. In 05, I remember going to something called the Money Show in Orlando, and the big buzz was ETF, exchange traded funds. Today, we have more ETFs, exchange traded funds, than we do stock. They're passive. They have no money managers. Now, they're tax efficient, they're fine instruments for trading and, maybe even some simple investing. But in my view, they haven't been tested, really tested. Maybe they'll never be tested, but they have a mechanism when money flows into ETFs, they have to create shares so that they don't become too bubblish. But there's a mechanism for creating shares. When money comes out, they have to deconstruct those shares. It hasn't really been tested. And if you read up on it, there are some naysayers, some cynics that say that that could be the next big issue. I subscribe to that a little bit. I do. I just don't think they've been tested. They've created these ETFs called target date funds. They've done a couple of other things too. And by the way, I don't think the crash in '08 was just came out of nowhere. I think that was a planned, coordinated hit and was done on purpose and by design. And I think in advance of the '08, they created the ETFs not so much for the public, but for their ability to manufacture and re-engineer a whole new market. And then the public adopted them as they usually do late in the game. That's my opinion, right? But I'm not going to trade my opinion. I wouldn't trade it. I wouldn't suggest anybody trade it. I'm not. I'm just giving an opinion of what went down. So right in between, as George W. Bush is going out, Obama's coming in. Right there in the spring, right around this time, they create a banking panic, including, some of the Democrats and Republicans too, talking about various banks going under. And all of a sudden it came in and we have this, panic market right as the new administration's coming in. And it cleared the way to do a lot of different things. One of the things that they did after '08 is they changed here in the United States. When you went to work for like IBM, General Motors, or any of these big companies, when you would go into work as a new employee, you would have to volunteer to be part of the 401k program. Well, they changed the legislation, and 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 it's a good thing. A 401k is a good thing. I'm not saying anybody shouldn't. I think you should, but you may not know what they did here, and especially if you're outside the States. They made it such that when new hires were hired, they were automatically enrolled in the 401k. They didn't choose to be, they automatically enrolled. And if they didn't want to be part after '08 of a 401k, they had to go to the HR person and tell them why. And that usually isn't going to happen as a new employee because the companies want you to participate. And it is probably a good thing. But the next question is, after you participate, well, where do you go? Well, prior to '08, it would be, a specific money management mutual fund that is managed. Well, the ETF then created and has created what they call target date funds. And the target date fund is an ETF, and they'll say, you come in and you're 25 years old, and they say, okay, well, you're going to retire in the year 2060. I don't know. I'm just throwing some years together. So why don't you put, 50% of your money in the 2060 fund, and then in the 2065 fund, and then in the 2070 fund. But the only problem is, there's nobody running those ETFs. It's a scam. The targeted date funds, their strategy, this is opinion now, right? I'm giving you my opinion. You can do with it whatever. Everyone's got one. But the strategy is simply, you send us money, we buy stock. You take money out, we sell stock. So there isn't a spit's worth of difference between any of these targeted date funds or any of these ETFs. And what people have done passively, they've just pushed a button at their brokerages and, they can move $500,000 with a push of a button in their IRA account into the SPY or into whatever ETF they want. Equally, they think they've been told they're going to be able to push a button to get out. Okay, maybe. Maybe. They can't close markets. They can't. Markets can do some crazy things. You may and I may not know, right? And they do change the rules. So that's one of the rules they changed. Another rule that they changed, why did the market lift off in 2009 on March 6th at about 3:15, 3:30 in the afternoon? All the exchange traded funds, all the markets lifted off at exactly the same time, never to look back again. What happened on that day? Do you know? They changed, that's Abby. They changed the legislation on some of the rules on some of the mortgage-backed paper that the banks were holding and some of the other stuff they were holding, what they call mark to market. Your account, my account, is always mark to market. Stuff goes up, stuff goes down, your account's going to change. Banks don't have to do that with some of that paper, and that's what lifted it off. Also, of course, was you didn't get the email, I didn't get the email that the Federal Reserve was going to come in and buy. They weren't going to buy stocks. No, they weren't going to buy futures. No, they weren't going to do that. They would never do that. That would be market manipulation. But what we will do is we will buy bonds and drive interest rates to zero. And then we're going to peg this shit down there at zero until all the retirees in Vero Beach and everywhere else and in Phoenix and all the warm climes that they can't get any money on any of their savings. And we're going to force that money. We're going to force them, or they're going to be eating dog food. They're going to force them to put that money into the market. We're going to enrich the hell out of ourselves. Now, we're only going to do it for a short period of time, of course. We're only going to do that for a year or two. Do you ever wonder why? I always do. Why did Bernanke, who launched that shit, why did he only serve one term? Ever ask that question? Ever ask him? God knows where he is. That little academic. He served one term as chairman and they get out. Maybe they didn't have the balls to turn it off. They still don't have the balls to turn it off. They don't. It's been on. It's, now, well, they did raise interest rates, but to try to quell inflation, but they're still in there. And the market has come to, maybe to their chagrin, the people that are in the market, it's like they just do think it is a perpetual money machine and it's never going to go down. Why would it go down? That's when the little hairs on your back of my neck, anyways, start to stand up. When I hear people say that, and I have heard many people say that in the last several months, why would the market go down? We're still making cars. Economy's still moving. People still going on vacation. There's nothing wrong. Everything's okay. That's when I get most concerned. The VIX. The VIX shows you a reflection of call buying and put buying. The VIX, spot VIX, historically is 18 to 22. It's down around 13. There's an old saying, when the VIX is low, you go. When the VIX is high, you buy. Warren Buffett, the old fart, and he is an old fart. He is a rich old fart, and he is no fool. And he may not sell, and he may buy for the whole time, but he does sell derivatives. He does trade options around his holdings. He absolutely does. And he did it with Goldman Sachs. He's got a saying, when they're yelling, when they want to tell you how much money NVIDIA has paid them, when they want to tell you how much NASDAQ stock they have, when they want to tell you that this 4th of July, when they're yelling, you want to be doing what? Selling. And when they're crying, when they're telling you a year from now, and there will be a time, how much money they lost, how the game is rigged, how no one told them, and they lost 20%, 50%, 90% of their retirement income in a bear market, and they're crying, what do you want to be doing? Buying. It's a little like that scene from Caddyshack. Remember Rodney Dangerfield? He's out there with a big golf bag, had a radio in it. He even had a telephone with a cord on it. There's a scene. And he's talking to his broker. God love the guy. And he says, they're buying, then I'm selling. They're selling and selling, then I'm buying them. What a truth to that. There is. There is. We are market makers. They would have no market. There would be no market if everybody just bought. You wouldn't. You would have bubbles and then you would crash. You would have bubbles and then you would crash. You got to have speculators. A market has to have them because that's what smooths out the price action. We are speculators. We are traders. We are market makers, not for anyone else, but for ourselves. And you got to decide what you're doing day in and day out. Are you just buying and selling shit to buy and sell shit? And anointing, the bar to admission to this is as low as it can get. I mean, anyone who has the money and a little bit of time and can fog a mirror can anoint themselves a trader, and the brokerages will let you trade just about anything. But that doesn't mean that you're going to be here, 10 years from now or even 10 months from now. You got to decide what it is you want to do and what you're trying to get out of it, and then set about, laying out a plan. And we try to spend a lot of time around that. Obviously, these tools are extremely thoughtful. Extremely. I'm embarrassed how long they took to build. It's embarrassing. I told you how many hours. Probably wouldn't take you as many, but it was measured in the months. Swing Machine has in its base form close to 800 lines of code. Hey, it's exhausting. And then we have Swing Machine Cubed. It's even more lines of code. That Pebble Beach we showed you has, quite a bit of code in there. We do all our own coding. I like to do it. I'm not professionally trained. I can get there. A professional coder would probably, the hairs on the back of his neck would stand up, probably looking over our shoulder. We can get there. They're very, very good at what they do, but you don't have a lot of coders that are traders. You don't. You get a lot of coders, you got a lot of traders, but you don't have, there's not usually too many, and they're expensive. They get a minimum of 4 hours. They get like $200 to $300 an hour, a minimum of 4 hours, and but we do not. If our members have something that if they can describe it to us, we will do our level best to try to get it done. Which he says like, Don, I got some things. I don't, and I don't have a deadline though. Don doesn't have a deadline, but as long as it's within our skill set. So I kind of joked there's a request by one of our members, and it's going to be a challenge, IL, but we're going to still see if we can get that done and out to you. Hopefully, we tackle it this weekend still, and he knows what I'm talking about for next week. And what happens is when we come up with something like that, it could come from us, but it could come from a member. We will develop in what we call a beta form, and then those members that want to get that beta form, we will generate it out. And then if it passes muster, it could be weeks, could be months. It'll go into our library for the benefit of everyone. No, I'm going to, yeah. We've just been we have been swamped. And what we're gonna, I don't want to get into it because we're on YouTube IL, but what we're gonna work on. So I want to, before I got to get it written IL, and then I want to test it because we're gonna try to do something that he's requesting, and we're going to try to fool the computer. And I'd rather do it on my computer than on your computer. I'll demonstrate it hopefully in a live environment for you and make sure before we send it to you, because I'm about to try to do something that we've never done to try to achieve a means to an end on something. So, and I didn't want to do that halfway because we are going to be doing something that we've never done before. But if there's any other questions, I kind of rambled off. There are some great books. You know, you know, I, I love to read, love to listen to different things. I am a student of, world stuff. I like that stuff. I don't trade off of any of it though. But if you haven't, the Federal Reserve, it used to be before 2008, nobody even talked about the Federal Reserve, right? We did, but nobody talked about it. If you thought the Federal Reserve was manipulating the markets, they would call you a tinfoil hatter. You believe in black helicopters and you were, conspiracy nut. Now today, for God's sakes, I mean, the Federal Reserve is in here every friggin' day with the hedge funds and everything else. It's just it's so commonplace, the central bank, right? There is an old book called The Creature from Jekyll Island. I was telling Doug about this the other day. It's an old book. It's a great book. And if you want to know what the Federal Reserve is, what it is not, what it's about, I strongly suggest you read the book. It's about 800 pages. If you don't have the time, the fellow who wrote the book was a college professor. It was, I think, G. Griffin, Edward G. Griffin, I think is his name. And yeah, no problem, IL. It is going to be good, I think. So I like challenges. I do. And honestly, it's what I want to do, right? I sometimes get tied up doing other things. I want to develop new things. And we like that. But if you go to YouTube and look up The Creature from Jekyll Island, there are about 12. It's dated. It's an old image. The sound is fine. He's got a very nice voice, and he will read the cliff notes of the book. Each video is about an hour, and it's about 12 hours. And if you haven't listened to it, you want to. And then get back to me. Because if you don't know what it is, and you don't know what it's about, and you don't know how they came to be and what they're doing, then you're going to probably be really pissed off. I was. I read the book probably in 98, 99, something like that. And I'm like, what the I was like, what? What? And then that only cemented what I was already coming to find out. I didn't put it all together. So that book really helped. Now the crypto crowd, they just kind of discovered it, like in 2013, 2014. If you haven't discovered it yet, you haven't listened to it, you do want to listen to it. Other great books around the subject. Oh God, there's some great ones. I think I'm trying to remember the lady. It's a lady's name called The Forgotten Man. The Forgotten Man. And that's a great book. Um, also, David Stockman's got a great book called The Great Defamation. All of Jim Rickards. Jim Rickards is not a good trader by his own admission. Very smart guy, terrible trader. I wouldn't follow any of his financial advice. But he's got actually, he's got 5 books on currencies and currency wars, currencies. I would read all those. They're all good, all very, very good. Jim Rickards, Niall Ferguson. He's a professor at Harvard. He's written some wonderful books. And one of them that I really found fascinating and interesting was The Ascent of Money, ASCENT, The Ascent of Money. And it gives a historical perspective of where money originates from and how it came to be, and even how the markets came to be. It's really, really interesting if you're interested in that kind of sort of thing. I am. So those are some really good reading. What else? Oh, oh God, there's a ton of them. We should really put together a reading list and put it on the website. But there's another Naomi. The author is Naomi Prinz. Naomi Prinz, Prins. She's written 2 or 3 big books. Very, very good. Oh, the another one, another great YouTube. It's on YouTube. The book is very good. I can't think of the guy's name. But in light of what we're doing here and what they're doing around the world, it was called, it's in Japan, it's based on the Japan model, and it was called the Princes of something. The Princes. What is that name of that book? Um, and he is the father of quantitative easing. Let me see if I can find it. The Princes of, what is that? Princes, the Princes, the Princes of Japan. What is that? Nope. Let me see. Father, maybe I do. Father of quantitative easing. Let me see if I can find this guy's name. Richard Werner. Richard Werner. He's a German economist and professor of banking from Oxford. He introduced the Japanese to quantitative easing. Only thing is, they, like a lot of good ideas, they bastardized it. And he is not happy about it. He wasn't happy with them. And we've made it even worse. Like all good things, sometimes people adopt a good idea and then they bastardize it. And then you sometimes wish you never told them about it. But let me see if, so his name is, the author is Richard Werner. Really, really smart guy. Richard Werner. and Princes. The Prince, yeah, there it is. Princes of the Yen. Princes of the Yen by Richard Werner. Available in book. It's also got a movie to it. You want to see the movie on YouTube. It's absolutely fascinating. And a lot of people say that we're living out the Japanese model, and I'm inclined to think so. I'm just not sure exactly just where we are in this thing. Um, I think we got another turn in the barrel, though. I'm inclined to think that we got another big crush coming, and then I think they're gonna do it all over again. And automobiles are gonna go from, you know, from an average automobile being, 35, $40,000 a year to $80,000 a year, which, I mean, sorry to say. I mean, that's what they're doing, right? The harder you work, and they just keep, I don't know, I thought I had a great college education, but I don't know how I got through there without them ever talking about the Federal Reserve. I don't understand, how we got through. What a sin. I wish I knew some of that, but they didn't talk about it. They didn't talk about it even in college. I wish I knew. Um, if I was to talk to my young self today, if I was to talk to a person 20 years old, I would tell them to collect whatever the currency is of the day. I don't care what it is, dollars, euros, maybe even cryptos, and put it into something hard, put it into something real, and hopefully put it into something that can generate income, because they will. These people in these central governments, one thing that you can bet on is they will change the rules. They will change the tax code. They will change the rules, and it will not favor you. It will not. It will favor them, but it won't favor you. Sorry. In any case, I rambled on there. Let's see if we can get another turn down. It's therapeutic. I like sharing the word. Let me know what books you're reading. Let me know what videos you're watching. Let me know, because I like to read new things. I don't want to be the last guy to find out. So once again, we're waiting to catch the next bus. We took off a profit maybe a little bit too soon, and we intervened for the first time this week. And so we're up 2023.59 for the week, trading one contract of the NQ. If this market does turn over, the strategy will pick up on it up here. Swing machine though looks all green. And once again, they continue to push this market up. Anybody short on an interim basis or trying, has been in what we would call a pain trade. They're just not letting them out, or they're getting out, but they're the ones buying. It's funny how that works is that the ones most skeptical, the ones most, you know, not friendly to the market are usually a lot of times the short positions, and they're the ones who get forced to buy it because they drain them. If you have any questions, let us know. And we can, if you want us to plug in any stock as an example, you're on about a 50-second delay, but you're not trying to trade from here anyways. It's really just for education. If you want us to plug in a stock, let us know the interval. If it's a daily, we can plug that into Swing Machine and we can show you how it would be positioned, where it would have gone long or short. If you want to see, if you're curious, happy to do it. And we said it at the time that we probably would be on the wrong side taking out that money off that trade. And she continued to run, probably cost us another 500, but that's okay. We don't get them all. We don't get, when we intervene. And we intervened because the strategy had a modest day, right? And we were losing a little bit of time, a little bit of daylight. So come 3 o'clock, we're gonna stop. We won't trade beyond 3 in the last hour of the day. So we'll see if it trends down. We might have another one, but maybe not. I want to say thank you for those that came by on YouTube. Be sure to visit the site, ask us any questions, or email us any questions you have. We get a lot of questions about we're just saying some more common ones. Can I buy any of these bots? No. You can get them all, right? You have to be an annual member. You get them all. You get them all. Can I use another platform? No. You would have to use TradeStation. We have no affiliation with TradeStation, but they're written for the TradeStation platform. If you want to be a monthly member, then you don't get any of the bots. You don't get the live Zoom feed. You don't get any of them, but you do get a video view of all the algos at night, which can be very, very helpful, teeing up opportunities for you. So those are some of the more common questions that we get. In order to become an annual member, it's explained in detail on the website. You must go through what we call a Q school. It's required. And we got to make sure, you want to make sure that you're making the best decision. You go through the Q school. At the end of the Q school, if you decide to become an annual member, we're going to give you 30% of the value of the Q school back to you in the way of a credit or we'll just give it back to you. And but any other questions, be sure to visit the site, email us, and you're always welcome to call. Have fun. Okay, folks, and you can see we just fired off, the machine just fired off and is taking the short. So, this could be the beauty. So we do at 3 o'clock have to end abruptly on you. I'm sorry. We'll try to see where we are here. But I did not put that trade on. The machine put that trade on. And look what Swing Machine is doing, right? Swing Machine is also, you can see the selling starting to wave in, right? And that's what your eyes will get accustomed to. It will begin to wave. You see it rolling, the money, you can literally see the money rolling in, money rolling out. Hi, everyone. I'm sorry to do this to you. It's we need the resources on the computer, and we're going to have to say goodbye to YouTube just as she's getting profitable, hopefully on this last trade. This will be our last trade for the day. It's been a modest day thus far, but we'll wait an extra minute or two should anyone have any questions. But again, thanks for stopping by, and be sure to visit the site, send us your questions. You're welcome to call, and we wish you the best. Thanks.